Welcome to the exciting world of investing. Here, you'll discover the potential to grow your wealth and achieve your financial goals. The stock market can seem intimidating at first, with its complex charts and fluctuating numbers. Don't worry, we'll break it down together step by step, so you can understand and navigate it with confidence. With the right knowledge and tools, you can make smart choices with your money and invest wisely. Investing is about growing your wealth over time, much like nurturing a plant from a seedling to a full-grown tree. Let's get started on this journey together. We'll explore the basics and build a strong foundation for your investing future. Investing in the stock market is like planting a tree. You start with a seed, which represents a company you believe in. You carefully choose this seed, researching and selecting a company that has the potential to grow. You nurture it with your investment, providing the resources it needs to thrive. Over time, with patience and care, it can grow into something strong and fruitful, providing returns on your investment. Just like a tree provides shade and fruit, your investments can provide financial security and growth, enriching your life. Think of the stock market as a giant marketplace, bustling with activity and opportunities. It's where buyers and sellers come together to trade pieces of companies known as stocks. These pieces or stocks represent ownership in a company, giving you a stake in its success. When you buy a stock, you're buying a small ownership in that company, sharing in its profits and growth. This ownership means you have a vested interest in the company's performance and future. Remember, investing in the stock market is a marathon, not a sprint. It's about long-term growth and steady progress. Be patient, stay informed, and watch your money grow. With time and dedication, your investments can flourish, leading to financial success. Let's talk about stocks. Stocks are a fundamental part of the financial world and a key way for individuals to invest in companies they believe in. A stock is like a tiny piece of a big company. When you buy a stock, you are essentially buying a small piece of that company, making you a shareholder. Imagine you love pizza. You want to own a part of your favorite pizza place. By purchasing stock in that pizza company, you become a part owner, sharing in its successes and failures. You can buy stock in that company. You become a part owner. This means you have a stake in the company's future and can benefit from its growth. When you buy stock, you're hoping the company will do well. The better the company performs, the more valuable your stock becomes. If the company's value goes up, so does the value of your stock. This increase in value can lead to significant financial gains over time. You can then sell your stock for a profit. This is one of the primary ways investors make money in the stock market. That's how people make money in the stock market. By buying low and selling high, investors can achieve substantial returns. Of course, there are risks too. The stock market can be unpredictable, and not all investments will be successful. If the company doesn't do well, the value of your stock could go down. This means you could lose money on your investment. That's why it's essential to do your research. Understanding the company's fundamentals and market conditions can help you make informed decisions. Choose companies you believe in. Investing in businesses with strong potential and solid management can increase your chances of success. Remember, investing in individual stocks can be risky. It's important to be aware of the potential downsides and to invest wisely. It's best to diversify your portfolio. By spreading your investments across different companies and sectors, you can reduce risk. We'll talk more about that later. Diversification is a key strategy for managing risk and achieving long-term financial success.
Ever heard of the S&P 500 or the Dow Jones Industrial Average? These are stock market indexes. Think of them as report cards for the overall stock market. Indexes track a group of stocks. They give you a sense of how the market is doing. The S&P 500, for example, follows 500 of the largest US companies. If the S&P 500 goes up, it generally means the stock market is doing well. You can invest in index funds. These funds track a specific index. It's like investing in a little bit of everything in the index. This helps spread your risk. Indexes are a great way to monitor the market's health. They can help you make more informed investment decisions.
Some companies like to share their profits with their stockholders. They do this by paying dividends. It's like getting a bonus for owning their stock. Dividends are usually paid in cash. You can receive them regularly, like every quarter. It's a way for companies to reward their investors. Not all companies pay dividends. Some companies reinvest their profits back into the business. That's okay. It can lead to long-term growth for the company and your investment. Dividends can be a great source of passive income. They can help you build wealth over time. Section 5. Understanding interest, your money's growth potential. Interest is like a magical ingredient that helps your money grow. When you deposit money in a savings account, the bank pays you interest. It's like a reward for letting them use your money. Interest is calculated as a percentage of your savings. The higher the interest rate, the more your money grows. It's like watching your money sprout wings and fly. Interest can also work against you with loans or credit cards. If you borrow money, you'll have to pay interest on the amount you owe. It's like paying a fee to borrow money. Understanding interest is crucial for managing your finances. It can help you make your money work harder for you.
Section 6. Capital gains and losses. Riding the market waves. Investing in the stock market can feel like a thrilling roller coaster ride full of ups and downs. When you buy a stock and its value goes up, you experience a capital gain. This is the moment every investor looks forward to, as it signifies a profitable return on their investment. It's like selling your house for more than you bought it. The joy of seeing your investment grow is akin to the satisfaction of a successful real estate deal. On the other hand, if the stock value goes down, you experience a capital loss. This can be disheartening, but it's a natural part of the investment journey. Capital gains and losses are a part of investing. They reflect the inherent risks and rewards of the market. The stock market goes up and down. These fluctuations are influenced by various factors, including economic indicators, company performance, and global events. It's like riding a wave. Just as surfers navigate the ocean's waves, investors must learn to manage the market's ebbs and flows. The key is to ride out the lows and enjoy the highs. Patience and resilience are crucial in weathering the market's storms. Remember, you only realize a capital gain or loss when you sell your investment. Until then, your gains and losses are merely on paper. If you believe in a company long-term, a temporary dip in the market shouldn't scare you. Long-term investors understand that market dips can present buying opportunities. Understanding capital gains and losses is essential for making informed investment decisions. Knowledge empowers you to navigate the market with confidence and make strategic choices.
Section 7. Navigating taxes on your investments. Just like with any income, you may have to pay taxes on your investment profits. But don't worry, it's manageable with a little planning. The good news is that long-term capital gains, profits from investments held for over a year, are taxed at a lower rate than your regular income. It's like getting a discount on your taxes. There are also tax-advantaged accounts like 401(k)s and IRAs. These accounts allow your investments to grow tax-deferred. That means you don't pay taxes on your profits until you withdraw the money in retirement. It's always a good idea to consult with a tax professional to understand the tax implications of your investments.
Section 8. Exploring alternative investments beyond the stock market. The stock market is not the only place to invest your money. There are many alternative investments out there. It's like exploring different flavors of ice cream. Real estate is a popular alternative investment. You can buy property and rent it out for passive income. You can also invest in precious metals like gold and silver. Other alternative investments include bonds, commodities, and even art and collectibles. These investments can offer diversification to your portfolio. Remember, alternative investments come with their own risks and rewards. Do your research and understand what you're investing in.
Section 9. Recommended resources, your guide to financial literacy. Knowledge is power, especially when it comes to your finances. There are so many resources available to help you become a savvy investor. Start with personal finance books. The Intelligent Investor by Benjamin Graham is a classic. Rich Dad, Poor Dad by Robert Kiyosaki offers valuable insights on financial freedom. There are also websites, podcasts, and even financial advisors who can provide guidance. Don't be afraid to ask questions and seek help when you need it. The more you learn about investing, the more confident you'll become in making financial decisions.
Section 10. The power of long-term investing. Patience pays off.
Investing is not about getting rich quick. It's about building wealth slowly and steadily over time. Think of it like planting a tree. You don't see results overnight. The stock market has its ups and downs, but over the long term, it has always trended upwards. By investing consistently and staying patient, you can ride out the market's fluctuations and come out ahead. Remember, time is your greatest asset when it comes to investing. Start early, stay invested, and let the power of compounding work its magic.
Section 11. Conclusion: embrace the journey to financial freedom. Congratulations on taking the first step towards mastering the stock market. Investing can seem daunting at first, but with a little knowledge and guidance, you can achieve your financial goals. Remember to start small, diversify your investments, and stay informed. Don't be afraid to ask for help when you need it. Investing is not just about making money. It's about taking control of your financial future. It's about achieving your dreams and living life on your own terms. So embrace the journey and watch your financial freedom blossom.